Hello, everyone. Happy Sunday. This is Simon with AvaTrade, and we're starting our weekly webinar, mapping our week ahead. Special welcoming, of course, goes to new people, and a few words about the title and explanation. What we do here, we're pretty much trying to create a plan for the upcoming week. And as I like to quote the traders, when they say you plan your trade and then you trade your plan. So it creates more order, less chaos, and possibly increasing the chances of succeeding in trading. A few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. My overall trading experience, it's over 24 years. I started as a prop trader back in New York in June of 2000. And I did it for about 11 years. And then I moved away from prop trading. And of course, I continue to be involved in markets. And I'm very happy to have this great opportunity to assist our customers at AvaTrade. The agenda of the webinar, as usual, we talk about indices, stocks, commodities, Forex. We talk about fundamentals. We go through economic calendar, and then we'll take a look at the charts and trying to see technically what is possibly waiting for us in an upcoming week, trading week. So today we'll be talking about, as usual, we'll talk about some stocks. First, we'll start with what happened last week with the CPI, PPI data, with some banks starting reporting the earnings. Then we'll go through indices, then we'll go through stocks, we'll go through commodities and FX. And we'll try to see what's happening, what could be happening, and combine both technical and fundamentals. Risk warning, you can find the full statement at avatrade.com. And of course, what we do here is purely educational. We do not suggest any trades. Social media channels, please feel free, and I recommend that you sign up and subscribe. Here you have Telegram, you have something that used to be a Twitter, it's X now. I'm still getting used to it. And my favorite YouTube channel, where you can find a lot of information. You can find tutorials, educational materials. You have webinars that we post there on a daily basis, and it's a great tool. Please feel free to use. Subscribe, click on the bell, be notified, share with people, click likes if you like it. And please, if you are watching this on YouTube, write your comments, your suggestions, your questions. We'll be happy to improve things. Okay, so before we go into the presentation, a few things about last week. We had Powell testifying, pretty much same language. The only thing now they want to try to focus on the jobs as they see progress, especially after the CPI data came out better than expected as far as the inflation slowly stepping down. So a few of the things that Powell mentioned, that they will be focusing on the jobs and employment. And also very important to know this, I'm going to show you this slide when we get there. The probability of the rate cuts for September increased. It jumped from 70% to about 90% currently for September 18 Fed's meeting. So that's kind of encouraging for the market participants. Let's see how things work out. Okay, so and of course the banks reported, the three major banks reported, all three stocks went down. We're going to take a look when we get there as well. So as you know, I like to prepare a few slides here. So this is from Barron's. The title says, gold can keep rising, bet on blink in the face of geopolitical risk and rate cuts. And it says right here, more tension around the globe, coupled with expectation of lower rates and weaker dollar, could lead to higher gold prices. You can find this article. I found it on marketwatch.com. Interesting article. Now, this is the chart that I just said a minute ago about. As you could see, after the data, this past week data, we had the probability of the September 18 interest rate decision It jumped to about 90%. And China this week, they're having a meeting, the Communist Party, they have the huge meeting there. And everybody's expecting some solutions, some moves toward reviving the economy. China has been doing that great. It lost trillions of dollars since the peak of the market, and maybe we'll hear something that will revive the struggling economy. Now, economic calendar, a few words before we go into it, especially for new people. First of all, you can find it on our website or the mobile app. Also, you can find it pretty much everywhere. It's a public information. It's accessible to everyone, and sometimes people ask how important it is to use it. Whether you use it directly, indirectly, it's up to you. But I think every trader or active trader that's involved in markets should know these things ahead of time. So here, I just took the high impact events. There's much more. As I usually say, you can customize it. You can filter through it and see what works and is relative to your trading. And simply, you don't want to be caught in a spike without knowing ahead of time that certain things are happening. All right, so not to say more. Okay, so these are the things, again, high impact events. There's much more. You can look through them, filter, and choose what's working for you. So Monday, we have all about China. You have GDP numbers, industrial production, retail sales from China. Also, we have retail sales from Germany. We have ECB Bank survey on Tuesday. CPI numbers from Canada, retail sales from US. Again, I'm not going to say all of them are important because it is in red and so high impact. So all of them pretty much are important. So retail sales were set from US, CPI data from New Zealand, CPI data from UK, employment data from Australia, employment data from UK, and that's Thursday. And then we have ECB with the rate decision press conference, monetary policy statement, and Friday retail sales from UK. Okay, so this is the high impact events. Like I said, there's much more. Take a look what's relevant to you and be prepared. Okay, we're gonna move now to the trading platform. And let's see what happened. First of all, in a minute, what happened last week. We had reaction to CPI data. Interestingly enough, we had initial move to the upside, then we sold, then PPI data came, the opposite happened, initial move, spike to the downside, and back up. And take a look, the tops are pretty much the same, the initial spike with the CPI. I'm showing you the S&P 500. And then the PPI hit that thing. So we had the kind of a U-turn, right? And then the last 2 hours of the market, we had a sell-off in S&Ps. We're going to see what happens this week, how market really digests. It's kind of weird because the CPI data pushed the market higher and then we sold, which came better than expected. PPI came worse than expected, but it pushed the market higher. It just shows you how it's not so simple to predict and operate in the markets, which makes it really an amazing environment. We don't stop to being surprised by things. Okay, so S&Ps. As a result, we did have a Thursday, a down day, Friday, up day. And as of now, I guess the Friday's high, 57.08 is our immediate resistance. Nasdaq sold more on Thursday as most of the tech stocks sold heavily, and the recovery was also less than on S&Ps. So as you could see, that Nasdaq is reacting to to sell the market stronger. Now, before I forget, as the money goes out of tech, it looks like there were a lot of talks about the small caps. And take a look what happened, Russell. We hardly ever mentioned this index. As you know, everybody speaks about NASDAQ, Dow Jones, S&Ps. Take a look, Russell. As the money coming out of tech stocks, the small caps had a really nice party here. Thursday, there was a move to the upside, Friday continuation, and we did break this resistance here. We're actually right on that spot, the level of March 31st of the current year, and the high was there 2166.8. Isn't that funny? Close 2166.9. That's very, very interesting. Take a look. We did have a spike and we closed right a penny higher, or 10 cents higher, I guess it's quoted in US dollars, right? Than the high of March 31st. Okay, in any event, it looks kind of mysterious here, right? Right to the penny almost. So we're going to watch Russell from now on. Let's see if this move is sustainable. Again, as Nasdaq sold, S&P sold, Russell 2000 had a really, really nice week, and we're right at the resistance. Something to pay attention to. Okay, Dow Jones also had a nice move. Both days we had positive Thursday and Friday. And similar to Russell right here, we are challenging this level of March 31st. So we're going to watch Dow Jones as well. Now, let's jump really quickly to China. As we said, the leaders are meeting this week. I guess things are already pushing a little bit higher here. We had 2 consecutive days to the upside in Chinese index. Now, Japan has been selling, first of all, in sympathy with the US market. Second of all, we had a nice rally in yen, something that we've been talking about pretty much every session about. We'll take a look at yen when we get to Forex. We'll have 2 consecutive days to the downside on Japanese market. And let's take a look how we act if we get to this level of 40,910. We might establish support, and the opposite could happen. We might just break through and move lower from here. So that's as far as indices. And take a look at Germany. Germany had a nice move to the upside. We're also challenging this. We just broke the major resistance of 18,800 around there, and we could be pushing through to challenge the highs, the all-time highs here. That's Germany. As we said, when we looked at economic calendar, we had a few things coming up, including the interest rate decision from ECB, of course. So here's the French index with all the elections and political issues there. We have a little bit of recovery. We are facing a lot of tails here around this area. We did hold this support at around 74.50, 74.60 area. Let's see how this week plays. Again, with the decision with ECB. UK also held this support here around 81.50, and we had the 3 consecutive sessions to the upside. We are facing the 50-day moving average that so far we haven't managed to break. Okay, so just to summarize the indices, we had Nasdaq and S&P selling heavily on Thursday, and then a little recovery on Friday. We have Russell 2000 and Dow Jones running both days, challenging the March resistance. And Germany and France and UK are showing a little bit of recovery. Let's see how this week data will affect those European indices. Okay, let's move to stocks, and let's start with NVIDIA. I'm going to move for a second to MT5. By the way, if you are trading stocks, MT5 is better as it has a larger number of assets to trade, including the stocks. So here we go. Here's NVIDIA selling on Thursday. We went from almost 136 to 127, about $9 range. Friday tried the recovery, a very tiny recovery comparing to the loss on Thursday. So it shows us that the techs are getting a little spooky there for investors. As you know, the reason I'm showing NVIDIA, it's been pushing both Nasdaq and S&Ps is continued running here. And let's see what's next. I mean, so far we are making a lower high. So what we can do, we can draw a trend line here. Let's see how the instrument acts going forward. So that's NVIDIA. Now, a few other stocks, of course, all the major stocks sold together with the market, but some of them specifically, I just want to remind you what we spoke about, something to really pay attention to, something called relative strength. So when the market is going higher and some major stocks are refusing to go higher, it's the sign of weakness. So the market turns around, those stocks are going to be the first one to fall. And I think we spoke about here, Amazon couldn't break these levels as the market was making highs. Amazon didn't. And take a look at the reaction of the Amazon. One day we raised more than a week of advance. And then also no recovery on Friday. We had a red day on Friday as well. Another one is Microsoft. Okay, take a look. They sold on Thursday and on Friday. And one of the reasons this was the sell-off right here when the market was going higher. Let's take a look. July 9th, a red day for Microsoft. And let's take a look. July 9th for Nasdaq. Nasdaq was a little bit flat, but not so selling as Microsoft. So Microsoft is something to do with OpenAI. They stepped down from being involved in it officially. And I think that was the initial reaction of the market to Microsoft here. And then, as you could see, Thursday was sold, Friday, no recovery there. And another one is Netflix. Where are you hiding? Here we go. Take a look at Netflix. I think we mentioned it also that the market was making all-time highs, and Netflix had a hard time breaking this level here, around 688, 690. And take a look. We did have 4 consecutive days, even before the market sold. But when the market sold, that was a big selling here and continuation on Friday. So Amazon, Microsoft, and Netflix are showing the weakness among all the big guys, as I like to call them. Now, let's take a look at Apple. Apple is holding nicely. He did have moved down with the market. Friday, a little bit of recovery. Tesla had a nice run until we hit the resistance of December of last year. We got flat on the year pretty much, and then take a look. We did fall with the market and a little recovery on Friday. Google was holding nicely until Thursday. Sell-off. And Meta, let's take a look at Meta really quick. Strong reaction to the downside with the market sell-off. Another one you can get to the add to the list. Okay, so again, put it all together. We did have some big stocks falling with the market. Amazon, Microsoft, Netflix, and it looks like Meta reacted weaker than the others. Now also we had banks. Banks were reporting, kicking off the earnings season. That was JP Morgan, Wells Fargo, and Citi. All 3 stocks sold. Let's take a quick look. Let's take a quick look. Here we go. Wells Fargo was the weakest out of 3. As we all know, that Wells Fargo is still pretty much under the magnified glass from the regulators following the scandal where the employees created millions of unauthorized accounts. And take a look, the stock fell. They reported well, but all three banks, they reported something they called net interest income lower than expected. And I looked into it, what it means. I just want to read it to you. Quote from the article. The net interest income, or the difference between what banks make on interest-bearing assets like loans and what they pay out to the depositors and other customers. So all three banks were low on those net interest income numbers. So Wells Fargo was the weakest, was down 6% on the day. It gapped even lower, but it did try to recover, still ended the day down 6%. JP Morgan was down 1.2%, also gapped down, tried to recover, closed lower. And Citi was down 1.8%. So all three banks closed the day lower. So the beginning is not so great for the earning reports. Now, also a few stocks that we have about 50 stocks out of S&P 500 reporting this upcoming week. And I'm just going to name a few of the big names for us. Let's take a quick look. We have Goldman Sachs reporting on Monday. As you could see here, so far it's been holding. Friday, a little bit of sell-off on Goldman. So let's see how that earning report affects the stock. So this is Goldman, Bank of America, Morgan Stanley, United Health Group. They're reporting on Tuesday. Let's take a quick look at Bank of America. So far, it's holding up. Again, they are reporting on Tuesday. Now, Wednesday, we have Johnson & Johnson reporting. Here we go, the pharmaceutical company. They're reporting on Wednesday. So far, we're sitting here at the level of June 24th with a few tails trying to move higher, not really managing. So let's just draw the line here, approximate line around this level. So let's see what Johnson & Johnson doing. And Netflix, one of the stocks that we just mentioned that shows weakness, is reporting on Thursday. We are sitting right on 50-day moving average. We're at the 5 consecutive days in red. Let's see what earnings will bring to the price action of the stock. Okay, so we're finished with stocks. We'll move to commodities. Again, as if you remember, I mentioned on the slide that attention is to gold due to geopolitics and possible rate cuts and weakness of the dollar. We might see continuation in gold. We are close to that triple top being reached. So here we go. Let's take a look at the weekly chart. We had a high recent in April 7th, we hit 24.31. Then briefly, we had a new high on May 19th, and we currently closed on Friday 24.10. So let's see how gold will work it out. Now, silver usually goes together with gold. Now take a look at the chart. And here, silver sold on Friday heavily, closing on the Thursday's low, when gold actually was selling a little bit. So it shows a little bit of relative weakness of silver comparing with gold. Important also to know. So if gold's falling, silver might fall stronger than gold, as it shows weaker move to the upside. Copper. Now, as I said, the Chinese leaders are meeting this upcoming week. Copper, usually the commodities being affected by Chinese economy as being used there a lot. So this is copper. We had a few days to the downside. Friday, a little bit of recovery. Crude oil as well. We could see some reaction of crude oil if any major moves will happen to Chinese index as well. Now, by the way, I just read it somewhere that as far as the demand for oil, British Petroleum, the BP says the demand is weakening, and OPEC says that is not. So I guess they have opposite opinions. Maybe they have agendas. Really don't know. But that's what I read today. Oil, after having this resistance confirmed around $84, been sliding lower. Then Wednesday and Thursday moved to the upside. Friday we had a nice move to the upside towards the 84, but then we sold and closing a little bit about 82. So let's see how oil is acting going forward with all the data we have with the Chinese meeting and so on. Natural gas. Natural gas, as we mentioned, has been sitting around 200 moving average here. We had 3 consecutive days to the downside, but we are holding this support of 7th of July, which was 226.7. We did have a spike on Friday below, but then moved higher. So it looks like the buyers are holding it around here. Let's see if we manage to push it through to the upside. Of course, the opposite scenario, we could actually have sellers push it through this close support at 226.7, and we might be sliding lower. We are below all 3 major. We are below the 50, but above. It looks like we a little bit above the 100 and the 200 moving average. So we're really holding tight to this area here on natural gas. Let's see how things work out this upcoming week. Cocoa and sugar. Let's take a look. Cocoa had a nice recovery after this, you can call it triple bottom here around 7,000. The 7,000 has been really, really holding here. We had the bounce. We had a nice move to the upside higher than the previous one. We had another sell-off hitting around 7,000 and recovering here. So we here on Friday closing at 83.50. Let's see how this week will place for cocoa. Just to remind us, especially new people, it's fundamentally based. There's a huge shortage of cocoa in the Western Africa where it's being produced or collected. I don't know what's the right way of describing it. In any event, we might see, if we do see the move to the upside, I just put the trend line here. We might be challenging the trend line. And of course, we could be actually sliding down and retest 7 again. So that would be a 4th attempt. So cocoa, let's see what happens here. Sugar, we've been talking about sugar. Had a nice run after a lot of accumulation here. And then we're back again to this major number, 1915. Why 1915? We had a sliding here and we stopped here at 1916 back in mid-April. Then we had to move lower. Then we're back. We started another move from around this level and we're back. And also 50-day moving average is right on that level. So around 1915, 1916, we're back to square one. Let's see how this level plays. If we hold it and start building support, we might see challenging the recent move to the upside, which ended at the high of 2076. Okay, so that's sugar. Okay, we're gonna move to Forex. We start with dollar index. Dollar's been selling. The 10-year yields went down. They helped gold moving higher, sold the dollar. And it's obvious one of the reasons why dollar is selling. The data is showing this, the inflation is slowing, as we mentioned earlier. That increased the probability of the Fed's cutting in September to about 90%. So dollar's been selling. Let's see how we act this upcoming week with more data coming in. Now, I want to mark this tail here. The low of it was 103.61, and we closed 103.74. Let's see if we hold it here. If you go left, a lot of actions around this level. The sell-off started here, some tails moving up and down that level, and then before moving higher, and on April 10th, we actually hit exactly that level, 103.62. So let's see how that plays. We're up below all three simple moving averages. Now, of course, no brainer if the dollar is selling, so euro, pound, and others would be showing the strength. Euro is kind of a mirror image of the dollar index. We might be facing that retest around 109.16. That's what the last time we were at the high, 109.157. Pound's been super strong. I think it was stronger than others besides the yen, which had an amazing move we're going to talk about in a moment. So here we go. Pound finally broke out of this cage that we mentioned for a long time between 126 and 128. So 2 consecutive days. We actually have 3 sessions, which brings us to possibility of some correction. Usually when you see 2 large bars to the upside or candles, they're followed by some correction. It might happen, might not. But take a look. On Thursday, we broke to this level that we couldn't actually break through since March. Nice move to the upside. That was Thursday, Friday continuation. We opened at the highs. High was 129.90. Close was 129.88. 2 pips lower than the high we closed. Very, very strong bullish move. Now, let's go to yen. Yen, it looks like it could be some speculations. It's never official until it becomes official, if it ever does. But it looks like the Bank of Japan, they used this PPI data and inflation data from the States, and there was an intervention. It looks like it. Again, I'm just saying what officials are saying. It looks like it was an intervention. So take a look at the move of Japanese yen. The major move happened here on Thursday, and the range of this candle is 430 pips from 161.75 high to 157.43. Huge move. Take a look how many days we erased. Let's take a look on the weekly chart. 3 weeks of the move to the upside was erased in 1 day. Now, across the board, as I mentioned to you, pretty much every week, and I mentioned to you that the Bank of Japan is famous for these interventions and the actions, and it will come. And when it comes, it's really hard to get in. So that's why some traders are in the trades, kind of anticipating these moves, which could be also very risky as well. So here you go. CHF JPY finally made this move to the downside. Again, the range is huge, from almost 180 to almost 176. Also about 400 pips, a little bit less. Australian, same thing. Canadian, same thing. Euro, huge move to the downside against all major currencies. Okay, so let's see if it's sustainable. So far, it's holding across the board. If you take, let's take a neutral one, kind of a Swiss JPY. It is holding. Take a look. We did have a move to the downside. Friday, we did try to recovery and closed lower. So it could be a temporary move to the downside before the move up, but it also could be the trigger for continuation and the building up the strength from for Japanese yen, right? So again, dollars in focus, of course, as the upcoming cuts are awaiting, kind of, and then the Japanese yen, as we've been talking about for a very long time. This move was super extended. The whole move, I guess, started when we broke the previous resistance here. So you could say since October 2021, I mean, you can date it even before, but the move was super strong across the board. Let's take a look at dollar yen. Dollar yen, same thing here. Yeah, November 2021, since we broke through the previous resistance, start building support. We had the initial move, 146, correction, move higher, confirmed the previous high, shorter correction than the previous one, and move higher. And it could be that we reach the top, and this reversal might continue into the downtrend on Japanese yen. All right, so that's very interesting to watch. Now, and let's finish with Bitcoin. After building a nice base here around 50, 56 and a half, we did have few tails, but never closed once. I think we closed below right here. That was on 7th of July, below the previous low here from May 1st. And then we recovered the very next day, came back into this support area. And so far, 3 consecutive sessions, we are currently trading above 60,000. We just, we closed yesterday above the 200 moving average, and that triggered continuation here. So we are kind of fighting now for the new support around psychological level of 60,000 on Bitcoin. Okay, that's it pretty much. I want to thank you all. Please don't forget about the social media channels, Telegram, X, and YouTube. If you are watching this on YouTube, please don't forget to click the likes. If you like it, don't fake it. And share it with your friends. Write your comments if you have any. That would be great. Before we say thank you, I can say thank you now, of course. Just to put it in a short summary, we did have Powell's testimony. We did have some data that encouraged traders, and it shows like probability of the interest rate cuts increased to about 90% for September meeting. We had banks that went down after the earnings. We have 50 out of 500 S&P stocks reporting this upcoming week. Among them, Goldman Sachs on Monday, Bank of America Tuesday, Johnson & Johnson Wednesday, Netflix on Thursday. A lot of attention to gold, of possible continuation in the rally. Chinese are meeting, the leaders are meeting. We might see some solutions coming out, or we might not. I want to wish everyone a good weekend. We still have some left out of it, and get some energy, get some power. I want to wish everyone a successful and positive week. Be well. All the best. We should be back, God willing, next Sunday. All the best. Take care.